Hello and welcome to this short yet comprehensive video explaining chattels for CGT purposes, brought to you by Aswatax. My name is Omar Aswat. Now, chattels, pronounced chattels, not anything else, means tangible movable property. And what does that mean? It means assets which can be seen, touched, and moved. Chattels would include paintings, for example, antiques, racehorses, and computers, whereas buildings, land, leases, or shares won't be chattels. Why? Because they cannot be seen, touched, and moved. They are not tangible, movable property. So that's the first thing. Chattels are tangible, movable property. Land and buildings are not movable, and leases and shares are intangibles. There are two types of chattels: cheap chattels and wasting chattels. A wasting chattel is a chattel with a predictable useful life not exceeding 50 years, for example, racehorses. And wasting chattels by default are exempt assets for CGT purposes, and this is found in Section 45 TCJ 1992. So we are saying wasting chattels are exempt assets for CGT purposes, and there are two exceptions where they will be chargeable if they qualify as plant and machinery and are used in a trade and capital allowances have been claimed, or they qualify as plant because they are used in the trade of another person. But again, by default, wasting chattels are exempt assets for capital gains tax purposes, meaning neither a chargeable gain nor an allowable loss occurs on disposal. Cheap chattels, and this is where these £6,000 rules come into play, is a non-wasting chattel. So it is a tangible, movable item that will last for more than 50 years. For example, we said paintings, as well as antiques and jewelry. Now, the rule is very straightforward and simple if demonstrated with the table below and practiced with examples. So we have proceeds going down the left, cost along the top, less than 6,000, more than 6,000. So the first thing to remember would be if proceeds and costs are less than 6,000, the asset is exempt from capital gains tax. So proceeds and cost less than or equal to 6,000, exempt. And the flip side to that would be if proceeds and cost exceed 6,000, so both proceeds and cost exceed £6,000, then we are back into the normal capital gains tax rules where you have the normal computation: proceeds less base cost equals capital gain less annual exemption if available equals chargeable gain. Now, the two instances that need to be remembered and practiced would be where proceeds are £6,000 or less and cost of acquisition are more than £6,000. We are looking at this box here. The capital loss would be restricted. How? With proceeds deemed to be £6,000. So you deem proceeds to be £6,000 if proceeds are less than 6,000 and cost is more than £6,000. Therefore, the loss will be restricted. Best demonstrated with an example. So here we have Tom buys a painting for £8,000, sells it for £4,000, incurs expenses of sale of £400. So now you know the cost of acquisition buys a painting for £8,000 is more than £6,000, whereas disposal proceeds are less than £6,000. So what do? Even though he sells it for £4,000, we deem proceeds to be £6,000. So deemed proceeds £6,000 less cost of sale, expenses of sale £400, gives you net proceeds £5,600 less cost £8,000, gives you an allowable loss of £2,400. So as you can see, the loss has been restricted. Why? Because if we had proceeds of actual £4,000, we would have had an additional £2,000 loss. This allowable loss can be set against other gains in the same year or carried forward in the normal way. So that is where proceeds are less than 6,000 and cost is more than 6,000. You have a loss restriction deemed proceeds at £6,000. And the final scenario would be where proceeds are more than £6,000 and cost is less than or equal to £6,000, what happens here? The chargeable gain is the lower of, keyword lower of, the amount calculated using the normal CGT rules, so proceeds less cost, and the total of the formula 5/3 multiplied by proceeds, gross proceeds that is, less £6,000. So the gain is effectively restricted to the maximum of 5/3 of gross proceeds less £6,000. Again, best demonstrated with an example. So let's say we have Tom again. This time he's inherited an antique vase on the death of his uncle. And the probate value was £3,000. As you know, base cost would be probate value. Tom later sells the vase for £8,400 and incurring expenses of sale of £300. So we have proceeds of £8,400 and cost of £3,000. As this is the case, we are now looking at the lower of the normal gain and the equation 5/3 multiplied by proceeds less 6,000. So let's do the normal gain first. Proceeds 8,400 less expenses of sale 300 gives you 8,100 less probate value slash base cost 3,000 gives you a gain of £5,100. We do the second equation calculation, which is 5/3 multiplied by 8,400 less 600 in brackets gives you 2,400. 5/3 multiplied by 2,400 gives you £4,000. Lower of the two items is the equation calculation, giving you £4,000. Therefore, the chargeable gain arising on Tom is £4,000. Okay, I hope that was straightforward. Now that it's been explained, you've got it in front of you in the table format, and we've looked at examples. Proceeds and costs less than 6,000 exempt, both more than 6,000 normal CGT rules. Proceeds less than 6,000 cost more than, you have the loss restriction, so you deem proceeds to be 6,000. And proceeds more than 6,000 but cost less than 6,000, you have the restriction with the formula lower of normal CGT comp and 5/3 multiplied by gross proceeds less 6,000. Just to finish off, there are anti-avoidance provisions in place to prevent a taxpayer from reducing their capital gains tax liability by selling each individual asset in a set separate to each other. So a set, for example, a set of antiques, you sell each item separately and potentially obtaining a tax advantage. There is anti-avoidance legislation in place found in section 262 of TCJA 1992, whereby the legislation treats a series of disposal as being one transaction of one asset for capital gains tax purposes. I hope you found that beneficial. If something didn't make sense, feel free to go back and watch that element again, and feel free to ask us any questions on the links found below. Don't forget to like this video if you found it beneficial, comment with your thoughts, questions, understanding, share with those who may also benefit, and subscribe to our channel where we hope to have you regular accountancy and tax tutorial videos. And I recommend you to check out our website found in the link below. Again, I hope that was beneficial. Thank you. Bye.